Today I want to teach you why it is important that you invest, start a business, do something with your money rather than saving in a bank. Whereas it is good to save in a bank, but it can be a collection point for your money. But it's not advisable to keep the money there all the time. Invest it, because the return on investment that you get is different from what you get when you invest the money. So I want to demonstrate it on the board so that we can follow the trend. According to the Deposit Protection Fund, I don't know if you've heard of these ones. Now these ones are meant to protect your deposit. That in the event that the bank closes or a financial institution, you get some money to Viramao. So these guys cover your money to the extent of 10%. That even if you have 100 million, you still can only get 10 million. No, they actually cover 10 million, irrespective of the amount that you have on the bank account. So you can imagine, if you're a business, if you're an individual, and you have 1 billion, and just like the banks that have closed before, Greenland Bank, Credit Bank, the guys who are banking with those banks, even if you had 1 billion shillings, these guys could only give you 10 million shillings. So you may think that having the money in a financial institution stayed there is going to help, but it is important that you actually get to use the money that you have. It is important. And how do we come into support? First is that if you have invested very well, the first thing we ask for, how much do you get a month? What are your cash flows? So you can imagine if you pick your money from the business, wherever you get it from, you've sold land or whatever, and you just have one block deposit. That's not cash flow. Cash flow is the money moving, coming in, moving out, coming in, moving out. And that's why it's called a currency. Currency, it's more like electricity, it has to flow. It's not supposed to be stagnant, it's not supposed to be stationary, it's supposed to be moving. So, if you can pick one element from this talk, is that even when the money is in the bank, it is still a risk. So you're even better off risking it with an investment that can afford you better return on investment than the return that you get from savings, if you get any. Because in the event of any catastrophic thing happening, you still can actually lose all the money. You only have the assurance of 10 million. Unless you tell me that the money that you're depositing or the money that you have in the bank account is less than 10 million all through, then it becomes a different story. So in a nutshell, it is important that you invest, especially if your money is above 10 million. Why? Because there are a number of investments that you can do with 10 million and above. Yes, there are businesses that you can do with less than 10 million, but it is also better that if you have money beyond 10 million, you can actually run something and get something profitable with it. So, go and invest rather than just keeping your money on the bank account, thinking that one day it will accumulate to 1 billion. The return on investment on your savings is too small to increase your money to the 10 to 100 million, to 1 billion, to $500 million that you intend to have in a long haul. So go and invest your money. If you can pick one element, go and invest your money. Even if it's 1 million, 3 million, it can grow. It can grow. Especially if you have above 10 million, you can do something with it, and it gives you better return than the return that you get from your savings. Get it from me. Thank me later when you start getting results. Thank you so much for watching this video. Subscribe, comment, ask a question, but also share any area that you'd like me to talk about. Thank you so much for watching.